and then we always ramble on.
We'll start it.
Yeah, cool.
Yeah.
All right.
What's up, everybody? It's PNN Friends Podcast. My name is Nima, and we have the co-founder, Pablo Heman, former investment banker, worked at an elite investment bank in Australia. And we're going to go over what's pretty exciting markets this week. And if you're a trader, good chance you should put some attention to. Pablo, right now in this situation that we're in?
Yeah.
With everything on with Iran and the Strait of Hormuz, United States. Just before we jump into the question, as of late April 2026, what are you looking at as a trader?
Well, okay. So the crazy thing is do you notice the bond market is the bond yields are up a lot. So the US 30-year bond yields are actually at 4.98 or almost 5%. Just quickly to explain that in simple terms, it basically means for the United States government to borrow money, they need to borrow at 5%, almost 5%, which is pretty high. When you think that it's pretty crazy. In the past 30 years or so, it's pretty rare for the U.S. government to be borrowing money, on the 30-year bond at 5%. So particularly right now, that means the market is uneasy. That means the market sees inflation coming. That means the market sees trouble coming, right? And yet the stock market, especially U.S. stock market, has just wanted to ignore all of this, ignore what's happening in the Strait of Hormuz, and act as if the war is over. There is no fighting right now, so to speak. But do you see what's happening with oil prices? Oil prices spiked up. Crude per barrel on the futures exchange, COMEX, is right now $105. In other words, basically, oil prices about up 80 to 85% since the war started, which is 7 weeks ago, or 8 weeks ago. And people are trying to pretend there is no threat, there is no danger. The reason why oil prices haven't gone as much at the pump, I'm sure it doesn't matter where you live right now, the oil price has gone up at the pump, at the gas pump, but it hasn't gone through the roof yet, is because every country, every major country like Japan, Korea, United States, have been selling their oil reserves, right? They all have a little bits of oil reserves to prevent a crazy emergency like this. And United States is selling its own oil reserves. That's your rainy day funds. That's what you use during a war. If some opposition, the enemy, cuts off your oil supply, that's when you're meant to use it. You don't use it by. Anyways, it's so they've been selling their oil, pushing down the oil price, and that's the situation we have right now. So the market is pretending everything's okay, and it's a particular challenge for investor. Do you 100% believe spike in oil price and the Iran Strait of Hormuz situation is going to cause a crash in the markets later on, and you stay out of the market, and if you do that, you're technically right, because in 3 months it could all crash, but you're going to miss the big runs. Look at the Nasdaq, look at the SP 500 making big new all-time highs. So what I've been saying to my Discord is to de-risk. I emphasized, I said, don't short it, right? Since the war started, I said, I'm going long oil, right? I'm not shorting the stock market. I'm not selling everything. I'm de-risking by selling some stuff, right? So when the market takes off, I'm still on board, but I'm not 100% on board. And I don't care where the stock market goes. I don't need to be 100% on board. I don't need to be 100% out. I don't need to be 100% in. So it's what I would call a de-risk position, where I still have enough positions in the market. When things go up, yeah, I benefit. But I think the oil situation and the Strait of Hormuz situation is a lot more dangerous than what the market is making it out to be. I mean, only the stock market has gone up and hit a new all-time high. The bond market, the bond yields are also hitting a major new high. That's a bad thing. That's basically saying the world is in a lot of trouble. The oil prices are in a lot of trouble. The inflation's in a lot of trouble.
So if these countries are dumping their emergency oil reserves,
yeah,
what happens in the markets if they run out?
It's Yesterday someone asked me this. I said, dude, that's like saying, hey, he's out of a job right now, but this guy, he's out of a job, and he's just using up his rainy day funds. He's just using his savings. He lost his job. He's got $10,000 in the bank. That'll last him about 3 months, which is what the oil reserves U.S., Japan, and Korea has. It'll last about 3 to 4 months, like 120 days, right? And after that is used up, then what do you do? If you're unemployed and you used up all your savings, what do you do? It's the same question. You only have this much oil that you produce or that you import from Strait of Hormuz, and then once you use all of that up, you have some backup reserves. Once you use that up, what do you do? It's the same question you ask an unemployed guy who just spent up all his savings. What do you do? So basically, like in some countries, they're already telling workers to stay at home, right? And again, stay at home. Basically, I think in Sri Lanka and Bhutan, they're telling their public sector workers work 2 days from home, only come to work 3 days, and even some employees are saying to their bosses, private sector employees in countries like Australia, saying, look, it used to cost me like $14 uh, per trip to come to work, and then $28 to go, you know, round way trip. Now it's costing double. So it's like what, $50 just for me to travel to work and then go back to work. You add that up for 5 days, that's just killing me, right? So rather than asking you for wage rise because inflation's coming, oil price going up, why don't you let me just work from home? Like it's just I don't know, use less electricity, turn the fridge on only during day hours. It's when there's no electricity, when there's no fuel, there's just no fuel. Like this, it's basically so it's a pretty serious situation. Yeah.
Yeah. So if you're trading the markets right now, and if oil reserves um, only last 3 to 4 months, what happens in month five?
Okay, so it's like this. It's like this. The the U.S. basically has something. United States. We'll use U.S. as an example because the one that everybody cares about, largest stock market in the world. It has 750 mil barrels of oil, and Biden. I'm not pro Biden or pro Trump here. I'm just telling you guys the pure facts. Biden sold about 50% of it, sold half of it for no reason except oil prices were high. Remember how back in 2022, oil prices 21, oil prices were high, and Biden just sold all that oil, like 50%, half of the reserves, when there was no real war, no real emergency. He sold it so oil prices could get crushed, which it worked. It crushed oil prices, and Democrats won the midterms and they stayed popular. Right, well, won some seats during the midterms and lost some. So the thing is, now U.S. is in a he was only able to buy back another 10% of it. So US is at sitting from 50% up to 60%, 60% of its oil reserves, and then unable to buy all the way back up to the top. So the gas tank literally is still 40% down. And now basically US, there is a misconception. Most people say, oh, US has no problem. It's China, Japan, Korea, Europe. They're gonna get squeezed. US is fine because we're the largest energy exporter in the world. Yeah, if you've been watching too much, Newsmax, that's the wrong decision you might come to. The problem is this: U.S. is the largest energy exporter in the world. It's not the world's largest petroleum exporter. In fact, U.S. imports a lot of petroleum. I think this is a really important thing to understand for people who want to know what's going to happen to the U.S. stock market, and for people who want to who live in the U.S. Now, U.S. exports a lot of natural gas and a lot of light sweet crude, which it gets from shale, from fracking, right? That has boosted U.S. to be a great energy exporter. But U.S. domestically, its own refineries are like 40, 50 years old. They are used to the old type of oil which U.S. extracts out of the ground, the Texas type of oil, which is more thicker, the thicker and sour oil. The shale boom, the fracking oil is light and sweet. That's chalk and cheese. The plants in the US cannot process, cannot refine that. So yeah, they make a lot of money by exporting that, but the cars in the US can't use it. You literally can't drive a car using that unless somebody can refine it for you. And US factories are not built to refine that, right? So I'll say one more thing. US actually exports a lot of energy in the form of what they call uh, natural gas liquids. You already know this. Forget that I said natural gas liquids. You know them as propane, as butane, as ibuprofen or whatever. The stuff you use in barbecues, propane, that sort of stuff. U.S. exports is number one exporter in that stuff, but U.S. actually imports 30% of the petroleum it needs to use every week or every day. So therefore, U.S. is actually short on oil. The ones that you put into your car tank, U.S. is 30% short on that. So U.S. is that's why you're seeing gas prices go up 50-60% at the pump. And oil price just spiked up in the last week or so, in the last week of April. So in the fifth month, like it's going to be like any other time when when you see oil goes for a spike. Oil goes up to 100, $130, $150, and people are panicking. There will be protests in the streets, stop this war. There will people who have to stop driving. People work from home. People cut on their trips, like maybe catch a bus to work. Whatever the people did during the good old days in 2014 and 2021 when gas prices spiked up, that's what they're going to have to do again.
Yeah. So how can the U.S. be the number one energy exporter, but still run short on oil?
Yeah, because okay, it's like this. Okay, so just to illustrate how two different systems, because I know you're more of a political commentator yourself. So just to give everyone an idea of what US should have done, in my opinion, and what China did. So, for example, US can, due to the US used to be the largest oil importer in the world. That's why the US dollar, petrodollar works, because it's the largest customer to the Saudis, to Qatar, to Iraq, to not Iran, but Kuwait. So then, of course, it says, I'm your biggest customer, and I got the biggest military in the world. Why don't you sell me the oil, but only sell it in US dollars? Everyone said yes. So that's why US dollar has its basic value, because everyone needs it to buy oil. But then what happens is, once US discovered shale oil and the shale boom and the fracking, then basically US became the largest energy, not oil, but energy exporter in the world, and starts competing with Qatar, Kuwait, Iraq, Saudi Arabia, Oman, those countries. Now, and U.S. had a lot of West Texas oil, which is basically the heavier type of oil that Venezuela has, that Canada has. But U.S. doesn't have enough of that for its own use. When it discovered the shale oil, which is a lighter type of oil, its refineries were used to the heavier type. They can only process that. So what you should have done is basically build factories that would basically refine the lighter type of oil. But because the United States is a capitalistic country, it works on pure capitalism, or as close to pure capitalism as possible. Therefore, basically, U.S. refiners never have the incentive to actually upgrade or change or alter their factories, stop operations, or invest another $3 billion to create factories that would also process the shale oil, the fracking oil that comes out of the ground from fracking, that is light and sweet oil. Now, in a more communist country or in a more centrally planned economy like China, what they do is they would say, that's crazy. They would say, we got all this oil, and you got all this oil. The only thing that's missing is the oil refinery. So they'll just get their national companies like China, Sinopec, that's like China oil companies, or Sino Petroleum. Get those companies to basically just say, open up three more branches, and in this area, this area, this area, and just start processing lighter oil, because now you have a huge supply of lighter oil. And those companies will say, well, but we don't make money, sir. And they'll say, tough luck. Where this is a government system, you're paid by the government. You're not a private enterprise. You're not trying to pump the stock price. So just go ahead and do it. So yeah, it loses money in the short term for those Chinese companies, but when a war like this comes, or when an emergency comes, like Strait of Hormuz gets shut down, then those money losing refineries that only process the lighter oil suddenly goes, oh, they can now become profitable. That's what happens when you have a public sector which sometimes loses money, but they do things for the longer term. Again, I'm not saying I'm not pro Biden, not pro Trump. I'm not saying China's got the right system with with so-called communism or what they call socialism with Chinese characteristics. I'm not saying US has the best system. The way, because you got a political audience, the way I explain to my American friends, I can sum it up in one simple sports analogy is this. I ask you, Nima, right now, I ask you, when you watch the UFC, do you think a guy with a jiu-jitsu background is gonna be world champion, or do you think a guy with a stand striking Muay Thai background is going to be world champion? If you had to pick one, which one would you choose?
Probably jujitsu.
Okay,
BJJ.
okay.
Yeah.
Now I understand why you said that, but the rules of UFC, the guys who founded the UFC are basically the Royal Gracie, the Gracie brothers from Brazil. They invented Brazilian Jiu Jitsu, and they basically bended a lot of the rules to you can't hit the, like you can tackle a guy, like hold him down like for a long time, and he can't actually just hit you in the back of the neck. You will die. Like a lot of the rules are pro Jiu Jitsu. But what I am saying is, you can see some guys with Muay Thai can actually do really well as well, and in fact in the UFC, you basically need to master both of these. You need to be really good at your Muay Thai standing and striking, and you also need some grappling, wrestling, and the Brazilian Jiu Jitsu (BJJ). What I'm trying to say is to all my American friends, my Western friends, is that basically there's no. If Bruce Lee was here, he would say there's no such thing as the best system. You need to use the best system that works right now. What your country needs, what you need. If you're fighting, say for example, if I'm fighting an opponent who is a world champion, three-time world champion in Muay Thai, I would not fight him in stand striking. I would try to tackle him to the ground, because I know his weakness is going to be wrestling and BJJ. But if I'm fighting a Brazilian guy who's comes from the Royal Gracie school of BJJ, then I know that's his strength. I'm going to avoid that. I'm going to stay on my feet as much as I can, and I'm going to do stand striking with him. Right. So it basically comes down to who is your opponent? Who are you fighting? You use the strategy that will win. That's what Bruce Lee's trying to tell you. Now, what is, in the general sense, what is America trying to win against? America is trying to fight against its lack of energy and power grid. America's trying to win against its energy emergency, whether it's in AI power, we're going to get to that next, or it's in oil, right? Basically, and the way to fight that is not to say, oh, we're pure capitalism. We never do communism. We never do state enterprises, whatever, whatever. And then you realize, and then you realize basically you just got to win. They don't. You can give it all these names like that's capitalism, that's communism. I'll give you another perfect example. When Trump came in, he actually forced Intel to sell 10% of his shares to the United States government. Intel has got so US held like $9 billion of shares in Intel. That was a year ago from the Trump government. Now Intel's gone up like 5x because everybody needs CPUs, and those stocks that U.S. government holds are now worth 40 billion. The U.S. Pentagon has also invested in some of these copper smelting refineries because copper is really needed for a lot of the weapons systems. Right, it used to leave all of that to the private sector. Now they're actually actively getting involved in critical minerals, critical metals. I think the Pentagon also invested in a lithium company called ELVR. That's the stock symbol ELVR. They also have a signed deal with Tesla to supply lithium. They're still in the exploration stage. And then 10, 20 years ago, that's unthinkable for America because you look at it and you go, gosh, that's communism. We should leave business to the private enterprise, right? So whereas now you look at it, yeah, and now you look at it and you go, well, the most right wing guys in America, which is Trump and Hegseth, are basically investing in copper refineries, investing in lithium explorers and developers, investing like mandated that Intel give 10% of its shares to the US government. Like that's the sort of shit you will find only in Vietnam, China, or Cuba or North Korea. But yet US is doing it and it's working. And it's working. So like I'm not a political account. I don't want to get into debates about, oh yeah, well that's communism. I don't want to give it a name. Like I just want you to win the fight, right? I'm facing John Bones Jones right now. Heavy light heavyweight champ of the UFC. And if I see a weakness, I'm going to exploit that weakness rather than go, oh no, I only do BJJ. Muay Thai is crap. I'm never going to do Muay Thai. You use Bruce Lee's whole philosophy is be water, my friend, right? Be water. Use whatever style or combination that's going to work for you. That doesn't just work in a street fight or in the ring. It also works. It also works when it comes to nations when they have to fight a battle, whether it's an actual war in the Strait of Hormuz or it's an energy battle with the oil or the AI situation. And that's what we should talk about now. I think the
Well,
because US is in a major AI. Yeah.
Pablo, before we get into that, so okay, so what cross market signal between oil futures, shipping rate, and currency flows is telling you that global liquidity is about to about to get repriced? Because you talked about that, I think, a little bit earlier before the equities react.
What I would say is usually you can you can see that. Okay, you know how gold took a big dump recently, and then people
Yeah,
wondering, oh, if we're in such a major war, then why is gold taking a dump? Well, it turns out
yeah,
Central Bank of Turkey basically sold like $58 billion worth of gold. it it it's because oil price kind of doubled for a while, and Turkey, for example, each week spends, say, for example, $2 billion or $5 billion to import oil, to import fertilizers, to import all the things that it imports. But then these things double in because they're priced in US dollars. Then suddenly Turkey's all of a sudden short of money and needs to spend rather than $5 billion a week. Now it needs to spend $10 billion a week just to buy that stuff. And when traders know this, they dump the Turkish lira, so Turkish currency crashed, and then they need to buy it back. They need to sell their gold and buy Turkish lira, so to support where else it becomes a self-reinforcing doom loop, right? So what
yeah,
I'm trying to say is basically a lot of countries had to sell gold because they were running out of US dollar liquidity, because suddenly there's a spike in the amount of liquidity you need in US dollars to buy oil, to buy a lot of things. So that's one signal to watch is actually gold, because when gold takes a dump, it means gold is one of those core holdings that central banks just don't sell unless they're really in trouble. If there's a and traders, if people are selling gold in a war situation, then it means there's a liquidity squeeze. They don't have anything else that is in a huge profit, like gold, and that can be sold instantly and just get cash. So they sell gold. So basically, it's that's what I would watch. Yeah.
yeah. Because you were talking about how the things were getting repriced and such. I think you were talking about it maybe earlier.
Yeah. Speaking of repricing, would you like to show folks
Because you think what?
that graphic that I sent you before we
Yeah, yeah,
jumped
yeah.
on
I'll pull
air?
it up.
And
I'll pull it
this
up.
is this is a
But why do
guy.
you think? As I pull that up, why would you say countries are dumping gold if that's their safest asset? Like right when the world
Yeah,
feels most
yeah,
chaotic and dangerous.
yeah. Some countries are dumping gold, and some countries and individuals like myself are taking every opportunity to basically to just buy gold when it pulls back like this. It's because, let me put it this way: some people believe in Bitcoin, some people believe in cash, and they say the world's going to war, the market is going to crash. I'm going to go all in cash. Some people say the world's going to crash. The only thing I trust is Bitcoin. I'm going to convert everything into Bitcoin. But let me say this to you: world economy crashes, the guy loses his job, and then he can't pay rent, can't pay child's medicine fees. he's got some cash. He's got lots of cash left, and he's got lots of Bitcoin left. And he suddenly starts spending Bitcoin, and he suddenly starts spending his cash. Then do you say, well, we're in a crazy war situation right now. Why would you spend your Bitcoin? Why would you spend your cash? Because it's so valuable. That's well, because that's the only thing he's got right now that's worth anything. His stocks are way down. His bonds are way down. He might have some. His car, a secondhand car, can be maybe sold for $3,000 right now. Right. The only thing he's got right now, and he's prepared for this situation, is that in a war, he's got lots of Bitcoin. He's got lots of Bitcoin, or he's got lots of cash. So he comes out and he sells and sells lots of Bitcoin. And if everybody does that, then Bitcoin actually takes a dump in that situation. This is what we're seeing with gold. And because precisely because that's the thing you go to when there is a liquidity crunch. It's and what happens is other countries pile in and they buy it. And they buy it. So so yeah, do you mind quickly just showing us the AI
Yeah,
chart?
yeah. I'm
Um,
about to pull it up here. I got it almost 1 second.
so basically,
Uh, for those of you who are listening to this podcast, you could actually look at it on our YouTube page to see the image we're about to pull up. Oh man, I
yeah,
think I might have lost you. Okay, one
that's
second
okay.
here.
So this dude, his name, he's got a very like Swedish name. I think he's Swiss or Swedish, and I can't actually pronounce his name, but he's quite famous right now. So he's a genius kid who's like 18 or 19, got hired by OpenAI to be their safety awareness officer. He worked there and he got fired for whatever reason. And so because he worked inside OpenAI, so therefore he really understands what AI is about to go through. Like we can analyze it, but well, I'm not a AI guy. I'm more of a finance background type of guy. So, but he understood exactly what AI revolution was going through. So he basically raised some money, and he says, "How about I invest for you guys?" And it's a private fund, by the way, private equity type of fund. And he says he's gonna invest in AI, which a lot of the Wall Street folks who are in finance, kind of like my background, doesn't really fully understand at the level he's understanding. So he basically picked a few of the bottlenecks in AI that nobody else sees coming, and he says we're going to invest in that instead. And so at the time, folks didn't really understand why he made those picks, but now we can see a lot of this is doing well. So for example, if we look at two of his largest positions is CoreWeave and Intel. And Intel has just popped recently because we suddenly switch from GPUs to CPUs. You notice he hasn't even got NVIDIA in there. Now, the thing is, everyone knew NVIDIA had a big run. But as I was also saying to my Discord last week, is basically now we've switched from the GPU run to the CPU run. It's very simple. When you go to a AI data center, you will find if you open up all the servers, right? Each big server, you open each one up, you basically find there's like eight for every one CPU. There's eight GPUs. You need a lot more GPUs than CPUs. That was during the training phase when everyone was training their large language models (LLMs). Now we've gone from the training phase to the inference phase, where everyone's starting to use it, and we've gone to the agent AI agent phase, like OpenClaw. Everyone's starting to use that. Now you need a lot more CPUs. So basically, now if you open up the same server, you open it up, they need to get to a ratio of for every one CPU, there's two GPU, or maybe even for every one CPU, there's one GPU. So you've gone from 1 to 12 to now 1 to 2, or even 1 to 1. What does that mean? That means there's going to be a huge demand for CPUs, and this guy saw it ahead of time. And look, I'll give you for I know a lot of folks in our Discord are basically really into Bitcoin and crypto. So let me just point out three things here that are actually really in the crypto space. If you look at Applied Digital, if you look at Iran, if you look at Core Scientific, these things make up about 18% of his portfolio. Uh, that 18%, all of those are actually, believe it or not, Bitcoin miners. The, 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 these are actually names that we're familiar with. Do you know why Bitcoin miners are actually in his portfolio, in the AI guy's portfolio?
Why?
Like at the time, I even spoke about one or two of them, called TerraWolf, in our Discord, and we were focused on it because they were a Bitcoin miner. Then what happened is they realized, well, Bitcoin mining is a very volatile business. In the good years, you make a lot of money. In the bad years, you could easily just go bankrupt because you need to spend all that money on electricity. Because Bitcoin mining machine is basically just solving continuous math puzzles, generating that hash rate. It burns up a lot of electricity, but then you mine that specific set amount of Bitcoin, and then if Bitcoin price goes up, you sell it, you make lots of profit. If Bitcoin price goes down, you lose money. It's like any other miner. It's like if you're a gold miner, silver miner, lithium miner, uranium miner, copper miner. If copper price goes down, uranium price goes down, you just lose money. So what happened is they realized, the whole market realized, but these people, their biggest advantage is they're actually hooked up to the electricity grid. They're actually hooked up next to like a big solar power station, where they're hooked up to a big hydro power station, or they're hooked up to whatever, a nuclear power station. They've signed deals for the next 5 years, 8 years, 10 years, to be in that area, and they can have however many gigawatts of power per month, whatever. And they've got the GPUs sitting there that are solving these math puzzles trying to mine Bitcoin. So have, what happened is Meta, Facebook, Microsoft came along, and they tried to build their own AI data centers, and they found they have couple of problems. One, they don't have the electricity and the power. That's the biggest problem. And two, GPUs are being supplied to them, but they don't have the power. They're not connected to the power grid. They look around and they say, who the heck has a lot of power who are not doing well right now that we can buy? And they looked around, they found these stocks, right, which is Iran, Applied Digital, right, and Core Scientific. These are Bitcoin miners which are sitting on a lot of power, and they're not making money. In fact, they're losing money because Bitcoin has gone down, and they're just not doing well. So they said, Microsoft signed a major deal with Iran, IREN, and they said it's like a 4 or 5 year deal, and says we will use your power infrastructure to be an AA data center. You just do the rather than doing solving math puzzles to mine Bitcoin, you now basically do computations using GPUs that are repurposed. You basically do computations to answer AI questions for AI or train AI, right? So once they pivoted, a lot of these stocks went up like that, 8x, 10x, whatever, right? It's just been a massive wave in AI right now, and the market. Some folks in the market realize this early on, but that's probably like 1%. 99% folks look back now, and it seems like, oh, that's really obvious what's happening there. But what I'm trying to say is you can take that same playbook and you can actually apply it to the other major competitor in this AI race. Remember how we said there are two major horses in this AI race? You've got America and you've got China. We've seen America already being the pioneer, show us which companies are going to do well. It's first it started with Nvidia and the GPUs. Then they basically see how he's got SanDisk there, 4.5%. Well, SanDisk is into memories. They make memories chips, DRAM. So then SanDisk took off, and then basically there's not enough power. So basically Iran and Core Scientific took off. And then they realized, well, now we actually need the connecting cables, optics, and the infrastructure that's going to connect all the GPU NVIDIA chips. So that's where CoreWeave took off. And then they realized, oh, we need the CPUs. And that's why Intel is taking off right now. But in China, they're probably like half a step or a quarter of a step behind. So it's like a time arbitrage. A lot of these companies, like 4 or 5 companies I'm talking about in my Discord, they're listed on the Hong Kong Stock Exchange, and anyone in America or in the Western world can just buy them, right? It's basically like buying German stocks or buying Canadian stocks, right? It's basically a pretty big financial hub. So anyone can buy it, and they are basically it's pretty simple. US and China, they're the only two major real horses in this race. US is going to build a lot of computational power. China is going to build a lot of computational power, and they're all going to use only their own chips, their own power grids, because this is very much a issue of national competition. So therefore, if we were to replicate what this guy is doing right now, right? If we were to replicate that on the Hong Kong stock market, we're probably ahead of the game, right? Whereas right now, for folks who are looking at this very successful portfolio, we don't know when this will top, right? It might only be halfway through. You jump in, there could be another 2, 3, 4x run in it. It could be great. Or what if it
Pablo,
tops in 3 months?
Pablo, if you had one high conviction trade right now,
Yeah.
what would it be and why?
Um,
As of late April 2026.
okay. So for example, I could probably say two high conviction trades. One is basically doing what this guy is doing, but finding their equivalent on the Hong Kong Stock Exchange. So, for example, Intel. Intel, what's the equivalent of Intel, but on the Chinese Hong Kong exchange? So, like, what I hope everyone realizes is that there's a everything that's happening in the world right now, including the Strait of Hormuz, including the this big push in AI, is because of a two-horse race, right, between China and the US. And I always describe this to my Discord by saying this is a what you call it. This is the Super Bowl. This is the Super Bowl of human history. The, After elimination rounds and quarterfinals, semifinal playoffs, now two teams finally meet at the end, and everything like the mega bull run in gold, in silver, in uranium, Ethereum. Sorry, not Ethereum, lithium. The big competition in AI, in Nvidia chips, Huawei getting choked of Nvidia chips. All this that's happening is basically due to these two countries that are going to compete with each other, trying to win the big final Super Bowl of human history. So, in other words, um, we all know that U.S. cut off the supply, choked China on the supply of Nvidia chips. So, and Jason Huang's not happy about that. So there's lots of GPUs in the US, and China's developing their AI models, and they need those GPUs, but they can't get access to those models, to those GPUs. They just can't buy it. They've been sanctioned, so they created their own GPUs. It's called the Huawei Ascend 21B. So you know how in the US they have the NVIDIA Blackwell 200 B200. In China, they have the Huawei Ascend 21B. Now, so people say, well, Chinese chips are shit, which is kind of true. So, for example, I'll give you an example. If we were to take one single Chinese chip, right, it's maybe runs at 40% the ability efficiency of a NVIDIA H200. So people dismiss it. People say it's never going to work. But in an AI data center, if you ever walk into an AI data center, what you would find is that they don't have one single chip in there. They buy one chip and yeah, well, it's going to power all the AI for Chat GPT or for cloud. What they do is they have a massive warehouse. They have literally like fridges. I call them fridges, right? You open it up and there's stacks. There's like 200 of these GPUs chips in there, stacks of them, right? There's basically there's so many, there's stacks of them. So basically, yes, a Huawei a chip is inferior. Like something like 40% of the compute power of an NVIDIA chip. But if you stack all these together, the Huawei actually matches in performance to a NVIDIA GPU because they're great at the optics and photonics in connecting these chips together. In one sentence, I'll explain it in a real simple example. You have a car, a Ferrari or a Lambo that's really powerful that can drag like a huge ton of weight, right? You have a Chinese car that's only 40% as powerful, but what if they hook up 5 of these cars and use cables to drag the same weight. They just use more cars, right? So China has found a solution to this problem, and that's why we've seen DeepSeek V4 come out in the if like 5 days, 6 days ago, and it's basically now everyone's wondering. Well, it's actually very competitive. It's the best open source model in the world, and it's competitive even compared to the closed source models like ChatGPT, and it's 100x cheaper than ChatGPT to run, 100x cheaper. So a lot of people in China or even outside of China are going to pivot and start using that DeepSeek V4. But of course, they can't be run on a illegal NVIDIA GPU. So what they're going to use is they're going to use their own Chinese GPUs. And so therefore, that portfolio that I just showed you guys, well, he's an expert in AI, and he knew before the rest of finance guys like me. He knew before the rest of the market that things like Bitcoin miners, like Iran, like Core Scientific, like CPU makers, like Intel was going to pop, right? And now we know, and we know 100% these things have popped. But it's kind of like time travel. If you go to China and the Hong Kong stock market, it's kind of like you travel back in time to about 2 weeks ago, where the market was slowly realizing this was the case, and they're going to use these Chinese chips to power the DeepSeek and the Kimi, the QN, their AI models. So they're kind of half a step or a quarter of a step behind. It's kind of like a time machine where you go back, and you will see this play out in China all over again as well.
All right, Pablo. I know it's evening there. We're about to wrap this up. So I have a few questions, about 4 questions. It's just very rapid fire.
Okay.
All right, very rapid fire. Okay, so as we're filming this, it is April 30th, I think here. Yeah, April 30th, 2026, guys. So
Okay.
if anyone listens to this podcast, just so you all know. So what do you think most traders are getting wrong about the market right now?
Well, it's basically split into two groups. Either as if they were so afraid of the oil situation that they were shorting the market, expecting a crash, that's probably uh, too bearish. If they're so bullish, they've gone all in and expecting the US AI spend to go on forever. That's probably that's probably too bullish, because, as I said, in my opinion, I'm in a de-risked situation where I'm fully aware oil prices can spike and crash the markets. So I have some positions left in there, and I've added some positions, right? But I am aware, it's kind of like having 1 foot out the door at the exit, right? I'm not fully exited, and I'm not standing in the middle of the pack, right? 1 foot out on the exit, be ready to run, but still participating in the action.
So what's one move you think traders are going to regret missing out on over the next several weeks in May?
Several weeks in May. Longer term, I would say gold, silver, platinum, lithium, copper. Those commodities are going to make a big run. But if you're asking me, just and that's because of the Super Bowl as well, because China, US fighting over resources and minerals. But if you are talking about short term, like next few weeks in May, then I would say the next big thing to pop are actually these AI hardware stocks in Hong Kong. The CPUs, the GPUs, the equivalent of a core weave, but in Hong Kong.
Is there anything you're looking at right now in the U.S. market that you haven't spoken about yet?
In the U.S. market, basically, yes. So I'll keep this for my Discord. There are.
By the way, guys, you could join the Discord. The links in the podcast, links in the YouTube. We started our trading community in 2021. We're one of the few, it looks like, that's still in the game. We have thousands of members. We're very beginner friendly. Would love to have you. You get a 1-day free trial too. Sorry, Pablo, go ahead.
So basically, if you look at it, there's a lot of there's there's a number of these Bitcoin miners that have popped up that have gone on a big bull run because they pivoted to becoming an AI data center server. Now, which Bitcoin miners have not pivoted yet? They could be pivoting next, and they could go on an 8x, 10x run. The market is pricing in those odds right now. So I'll pick a few of those, and I'm going to be posting them in my Discord. But you can
Wow.
look for it yourself as well. You can look for that yourself as well. If you have the time and if you trust your own research.
Nice, nice. Just so everybody knows too, in our community, we have people that coach. We have private streams. We have we have a lot of pretty smart members from around the world. This June is our 5-year anniversary. We're clearly beginner friendly, and we were one of the only communities that had a lot of crypto traders that we never did one crypto pump and dump. We never did one NFT project, and you could imagine how much money Pablo and I got back then at the height of the mania, and we said no. And I think that might actually be the reason why we're one of the last ones hanging in here. And so, one last question here: if someone's starting a small account today as a trader,
Yeah.
how would you approach the market?
I yeah, I would basically say go to where the action is. And people who are in our Discord, they're overwhelmingly into crypto. And I always say, guys, don't be crypto only, because look, it's like, again, comes back to the Bruce Lee theory. It's being crypto only is like saying I'm a BJJ only type of guy. And then then if you come up against a guy who is from the Gracie family, he's going to be even better than you. You're going to lose every time. So you look for the other person's weakness. You look for what's easier to do in the market. Is it Bitcoin and crypto right now is in a sideways bear chop? It could break out, but why not let it confirm and tell you it's in a bull market before going in? Unless you're a specialist in shorting, which is not your question. Your question is about guys who are starting a new right now. Then just look for the markets that in bull market mode, and then you analyze: is this thing likely to continue its bull run? For example, is US still going to be in an energy shortage? Absolutely, because China is trying to compete with produces 3 times more energy. So therefore, uranium, lithium, which is used for energy storage, these Bitcoin miners, these are all energy plays. Or even just buying the US power grid, something as boring as that. The symbol, I believe, is XLE. It's basically the energy grid in the US. It's like really boring boomer ETF, but even that. So I know some people buy call options on that. Could work. So the trend you're spotting, it might be ending, but if it doesn't, then just follow that bull trend. There are things like gold and silver. They're pulling back now, but I believe after this pullback, I think the second half of 2026, we're going to see major legs up in gold and silver, because this bull trend is still happening, right? Because we're about to wrap this up soon. So I will explain the bull logic behind gold, silver, uranium, lithium, these things in our next talk or podcast, or in my social media, or if you come into my Discord. But here, just understand that the takeaway message is that find the markets that are in a bull run right now, and ask yourself, is this logic going to continue half a year from now, and a year from now? If it is, then be in that market, rather than saying I'm crypto only, or I'm a silver bull only, or I'm a gold bug only, whatever, right? Like Bruce Lee said, be water.
All right. All right. All right, everyone. Thank you very much for listening to the podcast. Please like, subscribe to the podcast page, leave a review. It's helpful to us. And come join our community. We have a 1-day free trial. We'd love to have you. Pablo's there. Our team is there. And we're there to just help you understand the markets, get information in, and put your attention in places that could help you win. All right. So thank you very much. And we'll be back next week. Thank you, Pablo.
Thanks, everyone. And thank you for your time, Nima.
Thank you.
Okay, thank you. Bye-bye.